Hello and welcome. You with us here in Business Today. I'm Bhavish. Here are the day's top stories. A poll by Ola founder Bhavish Aggarwal exposes the chinks in India's EV plans. Respondents say the lack of charging infrastructure is a big hurdle. Cost and range anxiety, other big problem areas. Sensex ends below 60,000 as auto, consumer, tech and banking shares drag the indices lower. Nifty falls 165 points as persisting interest rate hike fears keep investors cautious. Mukesh Ambani adds fizz to the Desi soft drink market, resurrects the Campa Cola brand. The heritage brand will be available in 3 flavors to take on Coca-Cola and Pepsi, to be launched in Andhra and Telangana first. Sportswear brand Adidas set to post its first loss in 31 years. The company is forced to write off $527 million in Yeezy branded merchandise after ending its 9-year partnership with Kanye West. What does cryptocurrency trade being brought under the Money Laundering Act mean for traders and exchanges? Former Interpol investigator and current head of law enforcement at Binance answers in an exclusive conversation with BTTV. A poll by Bhavish Aggarwal has exposed the biggest chinks in the country's EV plans. The Ola founder asked a simple question on Twitter: what's the biggest barrier for you to buy an EV? The response has been huge and can be a good guide to the government in tweaking its EV policy.
Holi celebrations at the Ola Giga factory, a video shared by the company founder and CEO Bhavish Aggarwal. Aggarwal also uploaded this video, his own take on his future factory bots joining in on the Holi fun. Meanwhile, this poll also appeared on his Twitter feed with the question, what's the biggest barrier for you to buy an EV? The response was huge with around 19,000 votes. The biggest hurdle, it seems, is the lack of charging infrastructure, with more than 30% of the respondents choosing this as the #1 reason. The higher cost of EVs is the second reason. There also seems to be considerable apprehension among customers whether the EV battery will last 5 years. Around 80% of the respondents had range anxiety, a fear that the battery would give out during a trip. The poll triggered more than 500 responses, with people quick to share their suggestions. Customers from as far as Chhattisgarh were inquiring about hyperchargers, with another user suggesting that chargers be installed outside restaurants, cafes and other locations besides gas stations. There were also complaints of government subsidy on electric vehicles not percolating to the customer. But most took the opportunity to raise various other issues of services related to deliveries, of deadlines not kept and of accessories still to be installed. While the poll clearly highlights the gaps in the sector, the government has also been taking steps to promote the EV space in India. In the Union Budget presented last month, Finance Minister Nirmala Sitharaman announced a policy to support battery energy storage systems with the capacity of 4,000 megawatt-hour with viability gap funding. She also mentioned an outlay of 35,000 crore rupees for priority capital investments towards energy transition and net zero goals till 2070.
In the month of October last year, we did a ground report on the EV charging infrastructure in Delhi NCR, where we found most of the EV charging stations that we encountered were either broken or were out of service. This just shows there's a gap between what we want EV adoption to be and the ground reality. This was Akanksha Chaturvedi for Business Today TV.
Equity benchmarks today returned to negative territory, halting a three-session winning streak. The domestic indices dragged lower by automobile, consumer technology, banks, financials and energy stocks. Mid and small cap shares also finished on a weak note. Sensex was down over 500 points, closing below 60,000. Nifty also down at 17,589. We did have a few gainers like Tata Steel, L&T, Apollo Hospitals, Airtel and Cipla. Among the biggest index losers were Adani Enterprises, M&M, SBI Life, Reliance Industries and Adani Ports. Chairman of the U.S. Federal Reserve, Jerome Powell, had to face some uncomfortable and tough questions by a panel of senators about his monetary policy. He was grilled on whether the rate hikes by the U.S. Central Bank were accelerating joblessness in the U.S. The grilling happened even as the Fed chairman announced that there could be faster rise in interest rates than previously expected.
Federal Reserve Chairman Jerome Powell, in his monetary policy testimony to the U.S. Senate, a regular semi-annual event, but the outcome was anything but the most powerful central banker in the world dashed hopes that the era of interest rate hikes was over. He in fact hinted that the pace of rate hikes could be quicker in the future.
As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time.
The biggest battle for the U.S. Fed still remains keeping inflation within its 2% target range. Despite all efforts, inflation hit a 40-year high in June last year at 9.1%. It, however, cooled down to 8.2% in September and further to 6.4% in January, still far above the comfort levels of the U.S. Central Bank. But what is really worrying Powell seems to be the recent surge in consumer sentiment in the U.S. The February figure hit a 13-month high of 67, up from 56.8 just 3 months ago. The figure reflects an unexpected bullish sentiment among U.S. consumers. The fact that only a few believe that an economic slowdown might be around the corner. This also translates into high inflation expectations in the coming months.
The breadth of the reversal, along with revisions to the previous quarter, suggests that inflationary pressures are running higher than expected at the time of our previous FOMC meeting. From a broader perspective, inflation has moderated somewhat since the middle of last year, but remains well above the FOMC's longer-run objective of 2%. It makes sense to moderate the pace of our rate increases as we approach the level.
The policy statement by the Fed chairman was countered by senators who believed that rising interest rates to reach the Fed target of 2% inflation could push unemployment rate, a political hot potato, to as high as 10%.
When you're slowing the economy, you're trying to put people out of work. That's your job, is it not?
Not really. We're trying to restore price stability.
No, you're trying to raise
not wages.
You're trying to raise the unemployment rate.
There are
I know you don't like the phrase, so let me strike it. You're trying to raise the unemployment rate, are you not?
No, we're not trying to raise it. We're trying to realign supply and demand, which could happen through a bunch of channels, like, for example, just job openings.
I'm not asking you to again, blame anybody. But if history is right, unless you get some help, in order to get inflation down from 6.4% to, let's say, 4.4%, and the unemployment rate is going to have to rise to 7% based on history.
That's what the record would say.
Okay. And to get inflation down to 2.2% based on history, an immutable fact, unemployment would have to go to 10.6%. Would it not?
No, I wouldn't.
That's what the record shows. That's what the history shows.
Yeah, I don't think that kind of a number is at all. Earlier today,
Jerome Powell, who was recently in India for the G20 finance ministers and central bankers meet, has overseen a rate hike of 425 basis points since last January. This triggered one of the fastest rate hikes in India, with the RBI raising rates by 2.5% in just 11 months. And with inflation still out of the target range in both countries, it's clear that more rate hikes are in the offing. Bureau Report, Business Today Television.
Let's take a look at what's the latest update in the Adani Group stocks. After rallying for 6 straight days, today losing out their winning streak. 4 of the 10 stocks traded in the red, while Adani Green, Gas and Transmission were at upper circuit. Gautam Adani and his family reportedly prepaid all borrowings backed by the Adani Group shares, as per senior executives who told investors at a meeting in London. The meeting was part of the conglomerate's roadshow in London, organized as part of their attempts to assuage investor concerns about the group's finances. This development, as reported by Bloomberg, comes after the group repaid a $500 bridge loan that was due on Thursday. The loan was, as per media reports, taken to buy controlling stakes in cement companies ACC and Ambuja. 3 Adani Group stocks, Adani Enterprises, Adani Ports and Adani Wilmar, are again under the surveillance of the NSE's short-term additional surveillance mechanism framework. Shares of 10 listed Adani Group companies have been moving upward for the last 6 trading sessions amid some positive developments and low-level buying from investors. The total market capitalization of the Adani Group companies topped 9 lakh crore on Wednesday. That's up from a sub 7 lakh crore rupee level earlier this month. Abu Dhabi Investment Authority, ADIA, is reportedly close to acquiring a $500 million stake in Lenskart. The deal, which comes despite the so-called funding winter, is likely to value the eyewear brand at around $4 billion. Sources say the deal will comprise a mix of existing Lenskart shares and new equity. Last month, there were reports of Chris Capital planning to invest $100 million in the company. Lenskart is already profitable and plans to get listed in Indian bourses in the next 48 months. The economic contagion is only spreading in Pakistan. Let's look at some of the latest updates. The Pakistani government, led by Shehbaz Sharif, increased the sales tax on 33 categories of goods to 25% from 17%. These goods included imported food, high-end mobile phones and other luxury products. The country's Federal Board of Revenue issued a notification on March 8th to implement the last part of the 170 billion rupee tax revenue measures. Honda Automotive Pakistan said on Wednesday that it would halt production and close its facility for the remainder of the month. Given the current economic situation and the government's stringent policies, the company's supply chain has been severely disrupted. The company said the government's policies include restricting the opening of letter of credits for the import of completely knocked down kits, raw materials and halting of foreign payments. Pakistan's Finance Minister Ishaq Dar said today that the government is absolutely committed to completing the current $7 billion IMF bailout program, implying that the cash-strapped country could sign the staff-level agreement with the global lender this week. Pakistan is eager to sign a deal with the IMF. According to reports, the country only has enough reserves for 3 weeks of essential imports. Sports major Adidas could suffer its first loss in 31 years thanks to its breakup with rapper Kanye West. Adidas CEO said the company is sitting on $1.3 billion worth of Yeezy products with no clear solution on how to get rid of them. The products were developed in collaboration with Kanye. The two fell out last October after the rapper's anti-Semitic tirade. The split has already cost Adidas $632 million in sales in the October to December quarter. According to reports, Yeezy brand shoes would have brought in an estimated $1.2 billion in revenue this year. If Adidas decides not to repurpose the products, it will write the inventory off altogether, denting profit by another $500 million. That, along with $200 million of one-off costs, would bring Adidas to a $700 million loss this year. Take a look at Rishad Premji ringing the closing bell at the New York Stock Exchange with an all-women team on the occasion of International Women's Day. On Wednesday, a Gazette notification by the Ministry of Finance announced that virtual digital assets, including cryptocurrencies, would now be under the ambit of the Prevention of Money Laundering Act. This is said to have widespread impact on the now ailing crypto industry. Our correspondent Akanksha Chaturvedi caught up with Yarek Yakubche, currently the head of law enforcement at Binance and formerly an analyst at Europol, to understand this issue.
My first question is about the latest notification by India's Finance Ministry. They bought crypto transactions under the Prevention of Money Laundering Act. So what do you think? Is this move a positive one for the industry, or is it going to slow down the growth of the industry, and how is it going to impact cyber frauds and financial transactions like that? So let us know, please.
Yeah, thank you. Yeah, this is a good question. Of course, generally speaking, at Binance, we do welcome opportunities to actively engage with regulators, and we definitely do support clear rules of the game, clear regulations, because, of course, we believe that there has to be a set of defined rules by which cryptocurrencies have to behave. So having a clear regulatory framework is a definitely step in the positive directions. And of course, Binance and other large cryptocurrency exchanges will have to carefully study these rules and behave accordingly. When it comes to the actual cooperation with law enforcement and compliance and fighting criminals, I believe there won't be too many surprises in this end, because Binance is already compatible with legislation in many other jurisdictions, and often we go far above of what is necessary. So we can then, of course, discuss the individual compliance bits and pieces if we have time to go into greater details.
So since you just mentioned that Binance has several times, cooperated with law enforcement agencies and governments to curb money laundering, could you tell us about a few instances where they worked with the Indian agencies, say the Enforcement Directorate, to curb cyber fraud in India?
Indeed. And as you can imagine, like somebody who has 12 years of experience and moved to Binance last year, it is of really great personal importance for me to support law enforcement investigations around the world. So I have to say that we do support criminal investigations in India and other jurisdictions. So far, we have had a very positive experience supporting Enforcement Directorate investigations, as well as working with other law enforcement agencies. Example of such practical cooperation would be our support of the e-nuggets investigation, investigation that has generated a lot of media interest over the last few months. And during this investigation, we have provided extensive support to Enforcement Directorate, often under very short deadlines. And as you have noticed in the media, our cooperation led to identification of the suspects and ultimately led to a substantial seizure of funds. So this was one of the great examples of the public-private cooperation.
What are your views on CBDCs? And do you think, like governments say that they'll help in curbing down money laundering, they'll help in curbing down cyber fraud? What's your take?
Yeah, of course, this is a question for the governments to implement. So it would be kind of patronizing from my perspective as a cryptocurrency investigator working for a private company to basically give my views on what governments and central banks will be doing. But ultimately, the question is what the customers will use. Ultimately, it depends whether this will be something that the inhabitants in the country will be comfortable with, and if this is something that if this is something that will be practical for everyday use of people.
As someone who's worked in the law enforcement, what are some tips that you'll give, that you would like to give to people, especially in India, so that they don't end up losing their money?
Yeah, indeed. And of course, I'm not pretending that cryptocurrency is immune to criminal activities. Unfortunately, there are many criminal actors who are using the popular narrative of cryptocurrencies, and they are creating scam websites and different Ponzi schemes and different investment schemes that try to attract naive investors. And unfortunately, many of these platforms are fraudulent from the very beginning. These platforms, their only objective is to attract people to invest the funds, and in many cases they actually display the accounts, the balance on the accounts that is growing. They made people invest more and more money, and of course, the people will realize these sites are scams only at the moment when they will not be able to withdraw any funds from the platform. So my advice is, do your own research. Take a look at which platforms are most popular. Take a look at whether these platforms actually are used by millions of people, if these platforms were tested through time, if these platforms can guarantee that they have billions in assets, so that you will decrease your counterparty risk, so that you will decrease the risk.
And before we leave you tonight, here's a peek into Udayan Mukherjee's exclusive chat with Karan Thapar, chairman of Greece Cotton, about the company's big EV plans. Listen in.
You see competition in this space because, you know, while you've got investment in and you're launching products and you've got a good team, but there are significant competitors like Kinetic, like Ola, even the incumbent players, legacy fuel players like Bajaj Auto. How do you see yourself locking horns with them?
It's a competitive marketplace. There is the companies you mentioned and more coming in all the time. We have a slight early mover advantage, and hopefully we will do what it takes to maintain that advantage. I don't think any legacy player has any particular advantage in this field, and as I said, it is a completely different product altogether. It needs a different outlook. So, you know, an early mover advantage definitely will benefit us.
Watch the full exclusive conversation with Karan Thapar of Greece Cotton tomorrow night at 10:30 p.m. with Udayan Mukherjee on India Today.